Hey guys, so let's look at the crypto-backed dollar reset and debt or deletion program. So this is a speculative economic strategy, currency reset and debt monetization. So this strategy has three phases. The phase one, which is the erosion or the fight for inflation. The phase two is the hard asset accumulation or the crypto hedge. The phase three is the actual reset, the new crypto-backed dollar. The phase one, the erosion phase, which is basically hyperinflating the old dollar. The mechanism is basically the government would overprint or overissue the fiat USD and cause massive inflation. And the result is that the real value of the debt actually drops significantly. For example, when the debt is $1 million, a loaf of bread would cost, like, say, $2. And after inflating the economy, or printing excess money, the same debt, which is $1 million, would now could purchase a loaf of bread, which is $100. So the actual purchasing power of the dollar actually vanished. And the creditors are paid back with the worthless dollars, and the debt is settled on paper, but real wealth is actually lost. And then comes the phase two, the hard asset accumulation, the crypto hedge. The government builds a strategic reserve of hard assets, including Bitcoin, gold, etc. And as the fiat dollar crashes, the value of the crypto reserve skyrockets because it's capped. There is only so much Bitcoin that could ever mine. So the government uses these massive gains to finalize obligations and provide initial capital for the new system. And then comes the phase three, the reset phase, the new crypto backed digital dollar. Once the old debt is cleared, paired off with devalued fiat, the government launches a new currency called the digital dollar reserve. And that's backed by stable value and crypto reserves. And the result of this would be a new stable monetary system with a deleted old debt slate. So if we compare the old fiat with the new crypto backed USD, the old fiat or the dollars is not backed by anything. There is no full faith in it, and it can be printed as much as you need. It's unlimited, and the debt status is basically buried under interest. But if you look at the crypto-backed USD, it's collateralized by Bitcoin, gold, and other tokens. It's algorithmic, it's capped hard money, and so it can be launched with a clean slate. So by pegging the new dollar to the crypto reserve, the government tries to restore global trust. They essentially say the old dollar failed because we printed too much. This new one is high tech and backed by limited supply assets, so we can't overprint it again. But there's a massive catch. So, what are the risks in it? Because of the inflation, the middle class is going to get devastated. It's not going to just hurt the banks, but it's going to wipe out the savings of every citizen holding fiat dollars. There's also a danger that the US might never be able to get the trust from the other countries because they were hurt pretty badly from the old fiat system. Although now it's backed by a crypto or a gold, there's probably a situation where no one would trust US anymore. And there's also this invisible tax process. This process is effectively 100% tax on anyone holding the old currency. It is a wealth transfer from the public to the government. So the legislative proposals, basically the strategic Bitcoin reserve is it started in 2025, in early 2025. The policy shifts to position Bitcoin as a national reserve asset to address the national debt. The process basically in three stages. It's the acquisition first. The government mandated the purchase of Bitcoin, allocation of seized digital assets to the reserve, and then slowly accumulate more as needed by buying the Bitcoin from the exchanges. Reserve the management and under the custody. and then eventually reduce the debt with this strategy. So the reserve BTC, primarily for Bitcoin, capitalized by assets forfeited in criminal or civil proceedings, mandates a no-sell policy, permanent national assets. So this is a executive order that was given by the president in March 2025, ordering establishing strategic Bitcoin reserve for the United States. Apart from Bitcoin, the stockpile also has some altcoins, including Ethereum, Solana, XRP, etc. And there's also a SAR and oversight by a working group led by the White House AI and Crypto Czar. This is tasked with integrating assets into federal fiscal strategy. The legislative push, the Bitcoin Act of 2025. The Senator Cynthia Lemons introduced the Bitcoin Act to provide statutory teeth for the reserve. The key provisions of which are accumulating about 1 million BTC. That's the goal. It directs the Treasury to purchase 1 million Bitcoin over 5 years. That's approximately 5% of the total supply. And there is a 20-year lockup period. The acquired Bitcoin must be held for a minimum of 20 years. Debt retirement focus. Crucially, after the holding period, the only permitted use for these assets is retiring outstanding federal debt. Funding without taxes. Revaluing Treasury gold certificates to reflect current market prices, and that will be helped in reducing surplus funds held by the Federal Reserve Banks. The debt deletion logic, a double-sided hedge. So there are two sides. On the debt side of the fiat USD, if governments continue to print fiat USD, inflation reduces the real purchasing value of the $36 trillion. On the other side, the Bitcoin has a fixed supply and is expected to appreciate against the inflating fiat. And the result is, over 20 years, the government hopes to pay off cheap trillion-dollar debts using the expensive values of the Bitcoin reserve. So as of Feb 2026, the executive order status is active. Agencies have been accounting for their crypto and its crypto holdings. The Bitcoin Act is currently moving through the Senate Banking Committee. There have been debates, discussions going on every day. I'm pretty sure in February is going to have a major breakthrough in that discussions. The White House officials are working through the obscure legal provisions regarding the transfer of seized assets to the permanent reserve. So let's look at the same thing through the Vedic astrology lens. As per Vedic astrology in 2026, the Rahu is basically the innovation, obsession, unconventional wealth, suggests a cleaning of the gunk in digital economy structure. And the next conjunction is the Saturn-Neptune conjunction that's happening on February 20th of this year. This is a critical hard reset. The Saturn, the structure, law, meets Neptune, the dreams, the digital, in Aries. That will be dissolving old financial illusions for new structures. And then comes the Jupiter's aspect in May of 2026. That represents expansion and traditional banking. Predicts a surge in communication and trading energy, making the reserve a primary topic of debate. And if you look at the Treasury implementation timeline, the legal cleanup would probably be from now through the second quarter of 2026, working through the obscure legal provisions for holding seized assets. The astrological note for this is Mercury direct and Saturn demanding maturity in Feb for serious drafting. And the strategic purchases are probably expected in the Q3 and Q4 of 2026, which includes a 1 million BTC purchase plan in the Bitcoin Act. And the buying window would probably start in the late 2026, aligning with Uranus in Gemini. July 2026, which electrifies the digital flows. The debt deletion milestone, which is a 20-year plan. The plan mandates a 20-year lockup period, and this will be used in 2045 or 2046 to wipe out remaining debt. The summary of key dates to watch is Feb 20, the Saturn-Neptune conjunction. This would be a dissolving old financial illusions for new structures. July 2026, Uranus enters Gemini. This will be the surge of the rapid acceleration of the digital asset adoption and loss. November 3rd, which is the midterm elections, the pivot point where it determines if the Bitcoin Act becomes a permanent law. So let's look at the WT GANs analysis and see where the GANs analysis would converge with Vedic astrology predictions of the Bitcoin. Both systems highlight February as the critical pivot point where old price structure dissolves for a new phase. According to WT GANs, the law of vibration, markets would repeat in time units. The 2026 focus is on 60-year, which is from 1966, and the 20-year cycle from 2006. The death zone support. The major support for clusters for Bitcoin at $61,000 to $62,000 before a potential cycle reversal. The time over price analysis suggests 2026 as a year of character change, shifting leadership from retail-driven to institutional sovereign-driven. The key dates to observe, as per WT GAN, is Feb 20 to 2022, the natural resistance, and June 21, the summer solstice trend change. So this actually aligns with the Vedic astrology because the Saturn-Neptune reset, which is happening on Feb 20, Saturn meets Neptune at 0 degrees of Aries for a karmic reset, aligning with the GAN cycle. The Rahu's transit, dealing wealth, is being judged by Saturn, shifting from speculative toy to state asset. Arudha Lagna, public image, is Bitcoin's image transforming from shadow money to digital gold in the public eye. And if you compare both, if you look at the theme, GAN says the cycle completion or the reset, and the Vedic astrology says it's a karmic correction or the new era. They kind of say the same thing. The key month to look for is February and June, as per GAN, and also for Vedic astrology. The price outlook is 62K is a test, which is kind of actually the support right now for the 200 SMA. The volatility followed by true gains is per Vedic astrology. The market characters shifting from speculation to the actual value. And then Vedic astrology says that's a shift from chaos to structure. So the takeaway is that both systems suggest current volatility is a necessary cleaning process. While GAN points to 62,288 as a support for Bitcoin, Vedic astrology predicts debates around Bitcoin will become calmer and more institutional after the Feb 20 conjunction. Let's look at the MicroStrategies chart because this is a Bitcoin proxy. Understanding MicroStrategies chart also helps us strengthen our predictions and analysis. So the one-by-one angle for the MicroStrategy, the lifeline, says that the MicroStrategy trading below its primary one-by-one bullish angle, seeking the two-by-one angle, which is now at $132. Square of 9 critical support is at $131. That's the GAN mathematical floor. And the major support is at 123. That's the panic floor for accumulation. And right now, today is actually the $123. $123 is actually hit. So that's the panic floor for accumulation. So it might hover around 123 from now through Feb 20th, but it should definitely bounce back. Feb 20 to 2022 identified as the major cycle turn. Holding 130 through this period resets the cycle for a potential March rally. So the Vedic alignment or the purification phase, the current extreme fear mirrors Saturn's closing square to Rahu. The Feb 20th, the conjunction occurs at the same time as GAN's pivot, represents market washing out MicroStrategy's premium. So the Jupiter's aspect suggests a painful February, but the third quarter of 2026 should be in the expansion for MicroStrategies, debt deletion strategy gaining massive institutional credibility. So that if you look at the February trading matrix, Feb 5th is the earnings tomorrow, which is basically tomorrow. That's the truth moment. Price often squares with earnings volatility. Feb 13th options expiry support is at $132, is a key expected move lower bound. Feb 20, the reset point, Saturn-Neptune conjunction, a potential V bottom or trend reversal date. So the chart suggests that MicroStrategy is currently in a price discovery phase, searching for a floor near $131, because the US Treasury's debt deletion logic is essentially a corporate mirror of Michael Saylor's strategy. MSTR's ability to hold these Gantt support levels is being viewed as a litmus test for the sovereign Bitcoin reserve. So MicroStrategy's fear and greed history is at the extreme fear signal, which is 17, and it's also a 40% retracement bottoms. The historical data suggests that extreme fear in MicroStrategy is a precursor to significant relief rallies despite unique structural pressures. So in the past cycles, let's say in late December 2023 or the December 2025, MicroStrategy had 80 to 90% drawdowns before recovering all losses. The support floor, Bitcoin's retracement to 76 to 78K, is critically close to MicroStrategy's aggregate cost basis of 76K. This is a powerful psychological and technical support level. The MNAV premium collapsed from 2.5 to 1.14x, indicating speculative fraud is largely washed out, trading near 1:1 with BTC holdings. So in the 2020-2021 rally, MicroStrategy delivered double-digit percentage gains of Bitcoin. However, there is a 40% retracement rule. After a 40% retracement, holding the current demand zone could target a minimum 50% retracement bonds toward $300 and more. So we have the earnings report, and the first support is $131, and the second support is at $125, and that's at the extreme fear level. The current extreme fear readings represents a pain purification event, while index delisting risk is a weight. The proximity to be 76K BTC cost basis and 1.14x NAV multiple suggests the downside may be nearing exhaustion. With that, I conclude today's talk.